Good afternoon and welcome to this session on using moving averages to detect potential moves. Today is Thursday, September 8, 2011. Thank you for joining us today. This is Darla Tuttle, your host. In just a moment, we'll be joined by Daryl Jobman, a senior analyst for TraderPlanet.com. The information for informational purposes only. It is not a recommendation to buy or sell any trading instrument. The opinions given by our presenter may change without notice at any time. Please also be aware that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and we will be emailing it to you, so you will be able to review the material again at your convenience. If you're new to attending Trader Planet webcast, you'll be pleased to know that we have previously recorded webcasts on our site at www.planet.com. As an interactive event, Daryl will invite your questions at the conclusion. Your questions let Daryl know if it's been effective with the discussion and helps as he prepares future presentations. So we hope you'll help him out by sending in some great questions. Simply type your questions within the Q&A frame on the lower right-hand corner of your screen, and we'll stage the questions for Daryl to answer. As one of our more revered market analysts, Daryl Jobman trades his own personal account and has been involved in the financial market. To be a war veteran, he was a newspaper farm editor of several agricultural publications before becoming an editor for more than 10 years. He has written and edited more than a dozen books and courses on trading. Daryl enjoys helping others succeed at do's and don'ts. So if you're in need of his help, you'll benefit from his editorial contribution at TraderPlanet.com. It's now my pleasure to introduce the senior analyst for TraderPlanet.com and our good friend, Daryl Jobman.
Thank you, Dara. Thank you very much for that introduction. As we get into today's topic, we're going to be talking about moving averages, kind of the basics of technical analysis for many traders. But a couple of housekeeping type items. First, we have a couple of sponsors. I'm going to be using Vantage Point Intermarket Analysis charts when I get to my charts. And we are also sponsored by Shift, which is the publisher of SFO, which is an online digital number of other newsletters and publications and so forth that are very helpful. They put the package together, TraderPlanet.com and Wattendorf, and you have a lot of information and education right at hand for almost any level of trader. Well, today's topic we're going to be talking about, as I said, is the moving average. And I know when you say about moving averages, well, it's very popular. We know it's probably the most popular indicator that's used. The simplest technical indicator to understand, and there's probably more research to find the right lengths and the right combinations than almost any other indicators. Everybody tries to find, that one magic answer that there is to what will happen. Now, the moving average in basic, it smooths out price. Activity attempts to kind of over a period of time put kind of a smoother on those day-to-day gyrations that we hear, so we can try to find out what we can learn from the moving average. Well, first, of course, we want to know trend direction. That's the greatest thing that the most useful thing that we can get. We always have, as experienced traders will say, you always have to find where is the trend or its lack of trend. We need to know, but what is the trend? Are we in tune with it? And when we do have trends, when we look at the angle of that moving average, determine what that trend is going to be, we need to know, at what point is that trend? How much momentum does it have? Is it strengthening? Is it weakening? And those are other types of clues that you can get from moving averages, as we'll show on the charts in a little bit. Of course, then, we always want to know, when is that trend going to change? And there we're talking about, and usually, the way it works is that we have two or more moving averages, and involves crossovers and various studies of how to handle those crossovers. That's pretty standard there, that when the shorter moving average crosses above or below the longer-term moving average, suggests some kind of a possible trend change in the other direction. And then with that, of course, once we know that, when we have kind of a clue, we can get some short-term price forecasts that we can make out of moving averages. Kind of like the trend in place tends to stay in place. Sometimes you wonder in today's markets if that's so, but there does tend to be kind of a means of following the short-term trend to be able to forecast where it might go next and then to determine how to trade that. Now, the other thing about the moving average, of course, in some cases it can be used as potential support or resistance areas. You hear a lot of talk about on the stock market, people about like the 40-day, 50-day, the 200-day moving average. It gets to that point. I mean, technicians are around to cause bounces off those lines, sometimes some kind of a self-fulfilled prophecy perhaps, but very widely regarded moving average support and resistance based upon just where they are in proximity to those lines. And then of course the moving average, when they're pushing back and forth in very choppy trading, or when it's not in a well-defined trend that we can indicate them that when there is no trend available, this may be a time to not trade, stay on the sidelines, preserve capital. You don't always have to be trading to make money. In reality, what we're trying to do for the most part is preserve money when we're trading. So we do want to know about those times when we should not be trading. Well, when we look at the charts, we're going to know Vantage Point Intermarket Analysis software in the charts that we're going to be using, because the moving average is kind of a strength in there, kind of a the basis of a lot of the software techniques that you will find with the Vantage Point software. Now we know that we have a number of potential types of moving averages. The Vantage Point will provide the simple moving average. We have exponential moving averages. Now Vantage Point can do this, but there are also weighted moving averages. Lots of different types of moving averages that we can look at. Also, a lot of different lengths of terms. The Vantage Point, they have come up with kind of a computer analysis. What is the best combination for the short-term moving average? What's the best for the medium-term moving average? Best for the long-term moving average? So you will be looking at several different possible types of moving averages to fit your time frame and your trading style. We know for sure that we not depend upon what we know about the market. We cannot guess that what the market is going to do based upon fundamentals. Information very difficult to interpret how that information will be interpreted by other traders. So we have to look at some kind of tool, and moving averages happen to be one of the leaders because so many different people are following it. I should also point out here that I am not a salesman at this point. I am using it because it is a good software tool. We get no money for mentioning them or using them, but it just happens to be a good tool to help analyze the markets and come up with some type of way that we can make that work for us as a trader. Now we're going to talk about it. You may, when we get into those charts, you may want to put your computer on full screen mode, because when we do talk about the full screen mode, it will be a little clearer if we can look at the key points on the charts, and full screen mode might show them up a little better. Now, starting here, we can start almost with any chart, because moving averages can be applied to almost any market: futures, forex, stocks, ETFs, any